All right, welcome back everyone. Today, we're diving deep into a true titan of the semiconductor world, ASML. The stock has been consolidating for a few weeks, leaving many wondering if this lull is an opportunity or a warning. Is ASML a buy? Let's break it down. Okay, so what's the buzz around ASML right now? Well, the overarching narrative is one of robust demand for advanced chip manufacturing. ASML just crushed its Q2 2025 results, exceeding guidance across the board. Net sales, gross margin, and even installed base management. They even got early revenue recognition on a High NA system, which is huge. This tells us that despite some broader economic uncertainties, the need for cutting-edge lithography equipment isn't slowing down. It's a story of essential technology driving consistent performance, even as headlines like the recent Q3 earnings reports keep investors on their toes. For those new to the show, let's quickly introduce ASML Holding NV. These guys are the absolute kings of advanced semiconductor equipment. They develop, produce, market, sell, and service the complex machinery that chipmakers need, from lithography to metrology and inspection systems. Think extreme ultraviolet and deep ultraviolet DUV lithography. That's their bread and butter, enabling the smallest, most powerful chips. They're based in the Netherlands but operate globally, serving all the big players in Japan, South Korea, Taiwan, China, Europe, and the US. Their Q2 2025 performance, with strong logic demand making up 69% of system sales, truly underscores their critical role in the tech ecosystem. Now, let's get into the nitty-gritty of our scenario analysis. We've taken the market narrative, those stellar Q2 results, and combined them with our financial models and technical charts to paint a comprehensive picture. The strong operational performance and technological leadership are undeniable, but we've considered all angles. First up, our base case. We're giving this a solid 50% probability. Why? This scenario assumes ASML maintains its leadership, especially with the High NA EUV ramp, and benefits from stable, consistent growth in the semiconductor industry. Those Q2 numbers, beating guidance, show resilient demand and strong execution. We project an 18% EPS growth for 2026 from their current $26.10, which gets us to $30.80. Applying a PE multiple of 38x, in line with its status as a growth company, brings our base case fair value to about $1,170. And here's where the technicals come in. The stock is currently in a multi-week bullish flag consolidation, and this valuation aligns perfectly with an upward breakout toward the upper resistance levels, which is looking increasingly probable. Next, let's consider the bull case, which we're assigning a 30% probability. This scenario really takes off with a stronger than expected recovery in the global semiconductor market, particularly in memory, and an accelerated adoption of ASML's High NA EUV systems. Those Q2 surprises, like the early High NA revenue recognition, highlight their capacity to exceed expectations. Here, we're looking at an accelerated EPS growth of 25% for 2026, taking us to $32.63. Applying a more enthusiastic 42x PE multiple gives us a bull case fair value of $1,370.46. The technicals here also support this. A successful breach of that 1040 resistance, pushing towards 1105 and then 1171, would strongly confirm this more optimistic outlook. Finally, we have our bear case with a 20% probability. This is our what-if scenario. A significant global economic downturn, reduced capital expenditures, increased geopolitical tensions, or even unexpected delays with High NA EUV. While Q2 was strong, rapid deterioration could shift things. Here, we assume a much lower EPS growth of just 5% for 2026, bringing EPS to $27.41. With a more cautious 30x PE, our bear case fair value is $822.30. The technical supports at 951 and 830 would come into play if the bullish flag consolidation breaks down, but given the current pattern, we're leaning less towards this outcome. All right, let's pull up the chart and see what's happening. Based on our technical analysis, ASML is currently caught in a multi-week bullish flag consolidation. You can see it clearly, trading between roughly $937 and $1040. If we get that upside breakout, the next resistance levels we're watching are $1,105 and then $1,171. On the flip side, if this consolidation breaks down, the key support levels we'd be looking at are 951 and below that, 830. So, bringing it all together, is ASML a buy? Based on our detailed analysis, integrating strong Q2 results, a robust market narrative, compelling valuation scenarios, and that bullish technical flag consolidation, my verdict is a resounding yes. The risk-reward profile is highly attractive here, with a clear bias towards upside given the high probabilities for our base and bull cases. Given our base case fair value of 1170 and a bull case fair value stretching to 1370, ASML looks compelling. With the stock currently consolidating, I'd be looking for strong entries on a confirmed breakout above that 1040 resistance, or even on pullbacks towards the upper end of that consolidation range, perhaps around $970–980, setting us up for those higher targets of 1105 and 1171. That's it for ASML, folks. If you found this analysis helpful, smash that like button, subscribe for more deep dives, and hit the notification bell so you don't miss our next episode. And let me know in the comments below, what's your take on ASML? Do you think the bottom is in? Remember, this is not financial advice. All investments carry risk, and you should always do your own due diligence and consult with a professional financial advisor before making any investment decisions. My analysis is for informational and entertainment purposes only.